sir. All
Yes,
set.
sir. We would be starting at 5.
Okay. So what is the chronology? You will start and then you will connect us, right?
So basically, we would just give the introduction and the basic topic of the event,
Okay.
and then we would hand over to the panelist and the moderator, and then the conversation would continue.
Okay. Okay. Sure.
Everybody can speak.
I guess so. Can you guys hear me?
Yes,
This
sir.
is-
You're audible.
Yes.
Okay, cool. Thank you.
Hey Jitu, good evening.
Hey, Prasad, how are you? Was it Prasad? Sorry, I didn't realize.
Yes, Jitu, it's Prasad.
Okay, hi.
Hi, this is Amol here, Mr. Arora. We couldn't
Hey, Amal.
see each other yesterday.
Yeah, absolutely.
Yeah.
I got the
Yeah.
notice kind of late, and by that time I had wrapped up, so I
Okay.
couldn't kind of join the call. Sorry about that.
No worries. Hi, Mr. Shashadri. How are you?
Hi, good, thank you. You can call me Kishore.
Okay.
Hey, Sushant, how are
Hey,
you?
hi Kishore, how are you? Long time, eh? Nice to see you
Long time.
outside the HSBC platform.
Yeah.
So all these are MBA students, right?
Yes, sir.
So the session was open to outside, people who were interested as well, right? Or was it only for the students?
So it was an open platform.
It was open, right? Yeah. Okay.
Yes.
Because I did send the link to a few people, so hopefully they can join.
All right, so it would be a pleasure to have them.
Sure.
Hi Kishore, how is COVID situation on the other side?
We are all working from home. Everybody, all the
Okay.
teams across. Nobody is in office.
Yeah, I think that continues. I think that's one
Yep.
of the big advantages, learnings from COVID we have, how easily we can actually work from home.
Yeah, I agree. It was quite a big exercise, but we were able to get it in and settle down.
I think probably is the scenario across all the financial sector.
Most of the teams, I think most of the companies, yeah. It's Bangalore, Hyderabad, Bombay, everywhere, I think.
We at NPCI are an exception. We are working since May 24th, almost 30% of the staff in the office.
Okay.
Wow.
Good evening, everyone. You must gain control over your money. The lack of it will forever control you. These are some wise words by Dave Ramsey.
To be successful, you have to have your heart in your business. and your business in your heart. With these wise words by Thomas Watson, I, Riya Gupta,
And I, Diksha Bansal, on behalf of Money Matters Club, the official finance club of IBS Hyderabad, extend a warm welcome to everyone to this enlightening conclave, which is a part of our flagship event, Redux 15.0. The topic for today's discussion is recovery of financial sector post-COVID.
Before we start, let us give you a glimpse of how this year's Redux was organized and managed, making our 15th anniversary. Can we have the video, please?
Welcome to Redux 15.2, organized by Money Matters Club, the official finance club of IBS Hyderabad. Redux is an annual event where we dive deep into the world of finance and explore the unexplored. But this time, there is a twist. We take Redux online, where hundreds of people will join us virtually. The 3 days event will comprise of many activities, such as financial conference, where industry experts will enlighten us with their and online games based on financial concepts that require strategizing and brainstorming to succeed. Participate, play, win, and learn and stand out from the crowd. Witness as we checkmate every odds and prepare for a better tomorrow.
Given the current circumstances, and particularly with regard to the financial crisis, the issue of financial strength and accounting practices of the financial system have moved into the focus of the public attention. Today, we are here to magnify your knowledge on the subject and provide you a platform to clear your doubts.
We are really honored to have renowned personalities excelling in the corporate world with us today. Please welcome our first guest for the evening, Mr. Jitendra Arora. Sir is the Managing Director and Head of Business Risk Management at State Street. He was previously associated with American Express for over 19 years. Mr. Arora has an experience as the Head of Operational Risk with a demonstrated history of working in the financial services industry and is skilled in operational risk, financial risk, enterprise risk management, internal audit, process excellence, business and transformation, and reengineering.
Next, we have with us Mr. Rupesh H. Acharya. Sir is the Chief of Finance at NPCI. He is responsible for the overall finance and accounts function as well as for the legal and board secretariat function of NPCI. He has a demonstrated history of working for over 2 decades across industries like financial services, software, and manufacturing. Mr. Acharya is skilled in accounting and taxation, business planning and MIS, corporate finance, banking, risk management, disinvestment, treasury, fundraising, and portfolio management.
Our next guest is Mr. Kishore Seshadri. Sir is the Senior Vice President and Global Offshore Head of Global Banking and LCWMR team HSBC. Presently, he is managing a team of 80 plus credit risk professionals catering to global banking, large corporate, and commercial banking teams in over 25 geographies globally. Mr. Seshadri is an experienced credit risk and corporate banking professional with 22 plus years of experience in global banking markets across mature and emerging markets.
Next, we have with us Mr. Prasad Pongshe. Sir is the Vice President at State Street Corporate Services and Head of Corporate Actions and Income. He leads a multi-location team servicing APAC, EMEA, and North America region clients holding wide spectrum of financial assets. Mr. Prasad has 19 years of experience in banking and financial services, including leadership positions at organizations like Franklin Templeton and Real Foundations. He is an alumnus of the University of Mumbai and has a degree from the American Institute of Certified Public Accountants.
Our next guest is Mr. Denny Joseph. Sir is the director at KPMG Global Services since the last 5 years. He was previously associated with Deloitte for over 8 years and specializes in banking and securities, credit and market risk, model development and validation, capital optimization, regulatory compliance, risk data management, and blockchain.
Lastly, we have with us Mr. Sushant.
Sorry, can't hear.
Diksha, you're not audible. No.
No, you are not.
Okay, I'll proceed. And our next guest is Mr. Sushant Mehta. Sir is the Director and Head Client Management Group HSBC Global Banking and Markets. He was previously associated with ICICI Bank as a Chief Representative Officer of South Africa with a specialization in wealth management. He was also associated with HDFC Bank as a manager. He is an alumnus of Indian Institute of Foreign Trade. Now, I welcome the one who is open to new experiences and is an expert at building connections and maintaining them. Our moderator of the day, Mr. Amul Dete. Sir is the editor at ETBFSI and ETCFO by the Economic Times. He has been working as a finance journalist since 12 years and covers the entire BFSI universe and what really keeps them breathing and living. He is an alumnus of the University of Mumbai and Seoul National University.
Over to you, sir.
Okay. Thank you so much. And thank you, Ria. Thank you, Diksha, for the great introduction. And it's a pleasure to be here at this evening. And I can see the number of participants actually joining us on the Saturday evening. Ideally, we should have done something else on the Saturday evening, but I think great to see that everybody is trying to take part into this session so that they can gain some knowledge from the dignitaries that we have. When I looked at the list of the speakers, I really liked, thought which the organizers have put behind, and all of you guys have actually made efforts to kind of cherry pick all the eminent personalities from different sectors so that you could get the best. So I think you have succeeded half the battle now, to get the best people. And I will try my best to win half the battle so that you will get whatever is left. So to begin with, yes, it's a very important topic, recovery of financial services sector post-COVID. And in fact, I have been talking to a lot of BFSI leaders in last 3-4 months on the same topic. There are obviously major challenges that the BFSI sector went through, but the most important thing that this particular sector has is they were adopting digital since quite some time, and that is why they could, win over this COVID. I won't say they actually succeeded, but to large extent they managed to do that. And they have done a lot of changes. They dealt with a lot of challenges because of they had already adopted digital. I'm sure we have Mr. Rupesh Acharya who will talk about how digital journey has been for the digital payment in the last 5-6 months for NPCI, and different people will give a different perspective. Uh, to begin with, I will just say that we at ETBFSI and ETCFO, and specifically at BFSI.com, we obviously taking over and taking forward the legacy of Economic Times, and it's a digital news portal where we cover BFSI sector in detail, and we keep talking to a lot of BFSI players from around the globe. So I'm going to share, my learnings with the questions and trying to get best for all of you here. So to begin with, my straightforward questions to since you're, what you can say, introduced all the speakers. My first question is specifically about the topic, which is recovery of financial services sector post-COVID, and I would like each speaker to speak on this particular topic for 2 minutes, uh, specifically on the current state of finance sector, how they can deal with it, they are managing their company, and how do they see the future. So I will start with you, Mr. Arora. You're part of State Street, and you are actually heading a lot of things there. Being a MD, you are responsible for entire business vertical. How are you seeing the recovery in financial services sector post COVID?
Sure, and thanks for this opportunity. First of all, to the Money Matters Club, and as you know, I was seeing the presentation. It's I think first time they're doing it online, so I think kudos to them. It takes kind of courage and a lot of preparation to kind of get away from your normal routine to kind of do something different. So congratulations to all of you. So look, I'll start off, and I'll kind of try and frame my answer in a very broad sense, but of course touching upon the financial services sector as well, as this forum is, or this seminar is about financial services. So look, it may sound like a cliche, right? And we may have heard about it in last 8-9 months. We have been talking about a black swan event, and we're talking about we are living in unprecedented time, but this is all true. And just to kind of rattle off some numbers, I was reading like today morning, so the latest count where number of people who have been infected with COVID worldwide is still like around 57 million, and with 1.3 million deaths reported. And closer home in India, we are talking about 9 million cases and around 133,000 deaths. So by no means, these numbers are like, small numbers. These are staggering numbers. So it kind of tells us the enormity of, the crisis that we are dealing with, just to kind of put things in perspective. If you look at the major economies of the world, if you look at, the GDP is contracting, the major economies of the world, they are plummeting, and contraction is everywhere. So that's also a reality. But at the same time, the human race, we are very, very adaptable. We are very resilient. We come out of, crisis. Most of the times we come out of the crisis in a much stronger manner. Some of the people are not able to, or some of the organizations, they don't kind of, they perish in that. So it's like, either you protect yourself or you perish. But yeah, we normally come out of the crisis, like much stronger, and fundamentally shift the way we look at things. So whether it's like World War I, World War II, some of the other pandemic kind of things which have happened, we've dealt with smallpox, chickenpox, a lot of those things, right? So, and it's very interesting, I was reading this book from Yuval Noah Harari, on Sapiens, the history of mankind. The first page actually talks about, 100,000 years ago, we were one of the 6 kind of, cohabitants of, planet Earth. And we survived, all those 100,000 years. We have come out of it. So, survival instinct is always there. The main thing for me is that, how we come out of crisis. I think that's the key part, right? Are you coming out of the crisis on the other side of it, tired and, just kind of flowing with the current? Or are you coming out of that crisis, much stronger and much more prepared to deal with future? I think that's the key for me. So whenever, we are thinking about in our company that how we come out of the crisis, it's not about reacting to it at the back foot. We are thinking, how can we kind of, coming out of the crisis in a very proactive manner, in a manner that, we are, setting the agenda. We are not kind of getting disrupted, but we are disrupting, and that's how we look at it. Again, I can't go into a lot of details from a company strategy perspective, but that's the mindset that we have. And I'll tell you about a couple of examples. In my previous organization, American Express, when I worked with them, there was like during the financial crisis, we were talking about, people wanting to move, or we wanting people to move to paperless statements. And Amex being Amex, they had very nice, those statements, card statements, which would go out to the card members, very, very thick, nice paper, because Amex, always is about customer and quality and all that stuff. And we said, okay, no, we want people to kind of move to paperless. And it started as like a cost saving kind of a thing during crisis time, financial crisis of 2008. But very immediately we realized that it was a hook, which we can use to kind of cross sell, products to people or card members, give them customized service, customized products. So the point is, what I'm trying to make is that you need to kind of, use crisis as an opportunity to then kind of, come out of it much stronger. And I already see, this crisis or this event is going to fundamentally shift the way we operate, whether it's, talking about our customers, whether talking about, new supply chains which are being built, the customer playbooks are being rewritten. I think, digital, and the automation has accelerated quite a bit. So I think all those things are what is kind of, and financial sector is no exception there. They are also going through that whole, 9 years, as we say, and they will be at the forefront of a lot of these technologies, which are going to kind of, put us at the forefront, and how organizations respond to that.
Okay, good one, Mr. Rara. Thanks for that comment. And yes, crisis is an opportunity. Very well statement. Mr. Mehta, I will come to you. If you could share your expertise, considering you're handling the global banking.
Thanks, Amol. And first of all, congratulations to Money Matters Club to arrange this and put us such a large show with, I think I see 200 participants already being there. It's one of the parameters of success for them. Well done to Money Matters and IBS. Again, I would like to also thank Jitendra for his comment and support some of the things. Specifically, he spoke about resilience. As a human race, we are very resilient race, and which is what would take us out. So that's one important factor that I resonate with him. Other thing, generally what happens is that during the difficult times, especially speaking of the current situation in the financial sector, money typically tends to go to the safer havens. So that's one thing we need to deal with. So you'll have deposits increasing, the opportunity to lending goes down. However, we look at this latest numbers I was looking, I think today only. So bank credit has started growing back. It's 5%. So while it may be on back of a pent-up demand, it's one positive thing. Generally, credit growth is a lead indicator. So I think that's a very strong statement for us to look at it. Coming back to how India has been operating, India generally financial sector is driven on strength of the retail or individuals. As individuals, we are very disciplined. When it comes to corporates, the matter may be slightly different. So very underleveraged, low rate of default compared to what happens in the developed markets. So I think that's very important factor that is going to hold us in a good stead, and our resilience is going to help us bounce back. Coming back to other sector, which is important, is the NBFC sector, non-banking financial sector, where it would have its challenges with the stressed in assets, liquidity, and funding issues. But the large players on that are pretty much at home. So that is also going to help us. Other things that is probably happening in the Indian market is the deepening of the market, where other avenues of fundings are getting available to the corporates in the bond markets or the fund markets. As it becomes more, it also helps us. And from our perspective, what we look at it is that India is a consumption-led story, right. And that story is going to remain intact. And that is where I think we have great faith on it. And that will continue to bring us out of this. And it's probably a matter of couple of quarters. And then when it starts playing out again, the consumption starts picking it up. I think we should be then seeing the things back.
Right, Mr. Mehta. In fact, consumption is going to be a big role, play a big role, and that is the story that everybody is watching for. And we have seen major changes in NBFC space. In fact, a big remarkable change happened yesterday itself that RBI has came with a verdict, a big verdict. In fact, that large NBFCs can be converted into banks. It's a very big story. Yes, we'll discuss that consumption story of India a little later. But I will also take the views from the other participants. We have Mr. Danny Joseph as well. Mr. Joseph, can I have your comment as opening comment on the topic?
Yeah, am I audible?
Yes.
Okay, thank you. So it's a little challenging to come after such eminent speakers because whatever you wanted to say is probably already covered. But I'll try to add two aspects which I thought might be interesting, and that's something I see as part of the work I do. Unfortunately, I don't work a lot with Indian clients. I'm in a consulting practice, and it's mostly with US and UK clients I work with. Couple of things, and I specialize my work in the risk management side. So during the last few months, some of the interesting things which has happened is, I think, Jitendra, you echoed to the book you read on Sapiens. I'll take a little bit of quotation from there to tee off from where you mentioned about the Homo sapiens being the most successful race. I think one of the, at least what I thought from one of the reasons why we were able to succeed at the time was compared to much bigger other sapiens that lived at the time, notably Neanderthals, was the fact that we could form societies, we could communicate, we could weave stories.
Yeah.
And that is probably which separated us from other hunter-gatherers or just hunters. We could make societies, we could cooperate and hunt bigger mammoths than anybody else and be a much effective, sorry to use the word killer, I would use, that was needed in those days. Survival was, the fittest was obviously and today also survival of fittest is what's more important. So two things, just to not to deviate, is one is the human aspect of it. So last 9 to 10 months, I have seen members in my team, their immediate families, our clients getting affected by COVID, either they themselves or their families having to go down. So there is a lot of impact on one, your productivity for sure, your emotional capacity to work, working from home, the stress level that gets created when people are working. So that I don't know whether that is anywhere quantumized and said, okay, our GDP shrunk because of 5% because people were stressed out or people fell ill and could not work for 2 weeks or 3 weeks. And unfortunately, there were also deaths, right? So that aspect, I think, is not probably quantifiable. And that is something which is important for us to remember because the human aspect of the tragedy, we read about that on the mass migrations and all those things which happened in large parts of India. But even in the workforce, the society we are also aligned to, there has been a lot of impact which has been not said, not documented or not felt, but the impact of that is very real, is in my opinion. The other aspect on anecdotal probably is something which is very interesting, and I take it from a finance perspective. The last bigger crisis was the global financial crisis we had in 2008, 2009. Slightly different because of the contraction of the credit market. We see something which is probably similar at this point of time. But what has been dramatically different is what I noticed where the banks operate is the fact that a lot of these banks, especially the large banks, rely on models which are used to predict their losses, market strategies, or even the whole of risk management or their selling or marketing capability. Those models which have been built on past crises past experience, past data have failed. So the banks have a set of wonderful models which have been created by great mathematicians, quants, and statisticians who were built to last for, or built to work well under the last crisis, has miserably failed in this crisis. So that is something I've seen, and I've been working with a lot of my clients to help them with trying to figure out how to make better models, or in lack of better words, make better mousetraps to take care of the current crisis and what could come out of these, what could be the learnings that come out of the crisis. Never waste a good crisis, as people say, right? So that's what two things I would like to touch upon. Thank you.
Yeah, thank you, Mr. Joseph. In fact, valid points, and the point about the work from home and the frustration or the stress which the employees and the people are facing is a very, very valid point. And in fact, even that is my observation, that it's not been discussed at large. We are talking about the growth, we are talking about how to come out of this crisis, but actually, people should also talk about, and specifically the leaders or the management, that there is no end to work. People are working 24/7 actually. They're waking up with the work and also ending up with the work. So I think there has to be some good solution to that. Okay, moving ahead, I will bring Mr. Acharya here. And Acharya, your perspective is also important to us, because we have seen a lot of pickup in the digital payments. So considering this, if you could put your thoughts together on the opening topic, which is recovery of financial services.
Sure, thanks, Amol. I'm audible?
Yes.
Okay. First of all, thanks to the team IBS and Money Matter Club for giving me an opportunity to interact with the students, which is very close to my heart. In fact, I prefer to go to events wherein students are there than going to typically corporate events or corporate panelists with maybe the industry or in general finance professionals, because what I love is the energy which they bring into the forum, and that's where I also draw a lot of energy from them, and that's the, I think, need of the hour. Coming to the topic, I would say we'll have to see from an Indian perspective. If you see where we were as economy while we entered into this COVID phase, so inflation was moderating. The growth was also moderating. If you recall, December of 19 or January of 19, we had barely touched 1 lakh crore of GDP collection. The markets were at all-time high around 41,000 levels, somewhere around December, Jan, and everything was looking good, steady, and when we first saw maybe the outbreak in China and other parts, probably India was, a little, I would say, ring-fenced. We thought probably it will not come to us, and all those things were there. But unfortunately, this has been a very, 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 I would say, a fast-spreading pandemic, and soon, as I think some numbers also were quoted by Jitu, that it spread almost in every country of the world. But I think what mattered from India's perspective is, although we may be struggling, or initially we struggle at maybe response from a health perspective, but the response from an economic and financial perspective was quite prompt, and that's been I think the most important and the remarkable thing which India had done that point of time. So a timely lockdown at immediately after when we reached 1,000 cases was also unprecedented. People may analyze it in a different way. It was required, not required, all that. But I think obviously it was need of the hour, because nobody in the world actually at that point of time has experienced this pandemic. It spread, and the response time. So just to get our health systems to respond, I think the call taken, and which is the right call, though we are discussing finance here, but we all know Jaan Bachi Lakho Paaye. That's even true for the nation. So we may discuss finance, but that was not a time to discuss finance. And obviously, I think the health was put as priority, and we took a call to lockdown. And very interestingly, the entire lockdown episode had been done in a very calibrated manner. We had a very severe 2 months of lockdown, and after that, in a calibrated manner, it was opened up. So I was talking when we started the discussion that at NPCI started working in third week of May. Earlier we started with 10% of our employees, and then currently we are at 30% of our employees visiting offices or our data centers to manage the kind of volume we are handling at this point of time. That may be because we come under essential services, and the choice is still there to people to operate from home. But what I've seen in this entire 5 months of actual work from office, when most of the time we were in office and we used to interact with everybody outside through to the digital mode. So adoption of digital, it's not from financial perspective, it's not just from the transaction perspective. I think our communication, our education sector, you guys, IBS also, you must be continuing your lectures through this. Even the most of the business meetings, they have shifted to digital. There's been a huge conversion from using digital means wherever possible. So just to give a very very basic example is like, I've never had ordered my vegetables online, and I got a first chance to do that, and I've seen a farmers cooperative. Can you imagine a farmers cooperative immediately put up a very very seamless interactive platform wherein the payment gateways is integrated, where you can order everything and get the vegetables delivered at your home. I'm not talking of a VC funded branded any organization. It's just a farmers cooperative doing that. So that's the kind of a digital adoption which is happening at the rural level or at the ground level. One more thing which has happened, I would say, on the again from a financial front perspective, is again the support given by government to the needy and poor. Various subsidies were announced, various schemes were announced, and through our AEPS platform, actually, we had seen the maximum subsidies going through, and a very huge volume of transactions happening over AEPS. So that's been these are all the seeding which has happened at the economy level. And though we were initially very very susceptible and were told that India will contract by maybe more than 12%, 15%, then it came down to 10% to GDP. And to tell you frankly, we at NPCI also got contractions in April. Obviously, since your railways are not working, your airlines are not working, your entire markets are closed, obviously the transactions went down. And April almost, and the numbers are public, so we saw almost 40% drop in the transaction. From there, in May, some relief in the lockdowns in certain areas. We saw the contraction to the extent of 20%. And June onwards, the things started moving up. Just to give you some perspective, in October, actually, we have already crossed what we were at in February. These numbers are there. You can look at UPI has done the highest number of transactions, 2 billion transactions in a month in the month of October for the first time. UPI as a product has been launched 4 years back, and in 4 years, it has grown to 2 billion transactions a month. So this is happening, but to tell you frankly, it is to be analyzed whether it is just a conversion from physical to digital helping us to have these kind of volumes, or it is actually, in certain areas, there is actually growth. So still, we are not seeing anything happening on the, restaurants, hospitality, tourism is a sector which is still suffering. The flights and airline aviation services not yet normal. So that piece is still open. We have worked on various other aspects of our products to look at the needs which are required digitally, and all those things are getting done as far as retail customers are concerned. But yes, we have bounced back, I would say, in terms of volumes and at the ground and grassroots level, and things are looking quite promising. And with that note, I think I will hand it to Amol for take it ahead.
Sure, Mr. Acharya. In fact, good and valid thoughts. I was talking to fintech companies and also carried the same view that you just shared. In fact, you spoke in detail. The volume is up, and in fact, there are many changes that many people have started buying online. And in fact, we should thank NPCI for the UPI and also the digital payment companies and banks for actually creating this digital payment facility. Otherwise, I'm so sure it would have been really difficult for all of us. How would we? I mean, how would we would have gone ahead with online payments if had digital payment not been there? So I think this was amazing thing that we had actually, and we made a best use of it. So valid thoughts, Mr. Acharya. And now I will take Kishore, your view specifically on the topic. So I would like to have Kishore your opening comment.
Thanks. First of all, congratulations to the Money Matters Club and the IBS for a very well put out show and a very, very topical issue, what's happening across, when are things going to recover, how are things going to pan out, those kinds of things. I think most of the issues are covered by the eminent panelists. Maybe a couple of points from my view, which I can add on to what they have told. The markets itself, whether it is a Sensex, it has almost hit the same point it was pre-COVID levels, and it has actually overtaken the pre-COVID levels. Sensex is considerably lead indicator. So from that aspect, but my personal view is it's not a holistic growth. Okay, only some sectors have seen the growth. So that's where we have seen the growth in share prices or whatever we want to call it, where the money is. Travel and tourism, there are some sectors which are really struggling. Okay, that said, the Indian market is well entrenched in terms of the global market. That's what we can see, whether it's the NASDAQ, whether it's the Dow Jones, whether it's the FTSE, everything else have also hit almost the pre-COVID levels. In terms of GDPs, the Q2, which is potentially the Q1 for us, for India as well, because we are a April to March economy in terms of GDP. All the economies across the world have seen negative. That's where the first big lockdown happened. But when potentially from July onwards, we are seeing economies, the various sectors picking up, which is, I think, the green shoots, what we can call off. And we are seeing that it is picking up big time and slowly, gradually picking up. There are some sectors very clearly not picking up speed as much as expected, but the positive thing is the main auto sectors, which is generating a lot of in terms of economy for the economy, a lot of ancillary businesses supporting various other businesses across, as well as manufacturing. They're all seeing growth, which is a very, very positive sign. The biggest thing for me is the internet usage in the rural economy in India has gone up by around 24% compared to only 9% growth in the urban areas. That's because the urban areas were well entrenched in terms of usage of data. But it has picked up in the rural sectors, and the growth has also we have seen in the rural markets, which is again something we need to be a bit noteful about and happy about. But I think holistic growth across the sectors is what we would like to see in much more pace. Maybe it will take a couple of more quarters for us to go back where we want and hit the positive growth for the full year and beyond. I think these were the same main points I would like to share.
Okay, thanks, Kishore. And my last speaker is Mr. Prasad Pongshe. Mr. Pongshe, if you could add your comments also.
Sure, thanks, Amol. First of all, I will echo thoughts expressed by Jitu, Sushant, Rupesh, and Kishore about the organization committee of Money Matters Club. Where it's I know what efforts go beyond creating such an event. So very well done, guys. Now, in addition to whatever our speakers have already covered, I will cover a few topics from global standpoint, where what I'm seeing on global, and then I will talk more India specific, and then the major question where we stand on recovery. We will come to that. So first, I would like to highlight the opportunities that we have got because of the challenges. It is said that in the middle of difficulties lies opportunity, and these opportunities that we are seeing are mainly, when the lockdown started, all of a sudden in the month of March, all IT and ITES companies, almost every company, have maintained the required service levels to their end clients, right? And that is certainly big achievement. that no end client impact despite people working from home and 100% of the teams working from home. So these are some silver linings I would like to highlight.
Right.
Now moving on to the global side, yes, it has started impacting global economies right from January. So we needed to support our China counterparts in the month of January when lockdown was initiated. So we were aware what is coming, but we were not thinking it would come so early to us. So overall, risk teams of all the organizations have done very well job, managing overall risk. And on global side, we are seeing because the lockdown,
Right.
am I audible?
Yes. Please go ahead.
So because of the lockdown, overall, economic cycle has stopped, and that has created so many challenges for financial as well as other organizations. So to give you an example, every day we are getting 3 to 4 bonds defaulted worldwide.
Yes.
Which is a bigger chunk, and that is still continuing. Even governments like Argentina and Ecuador, they have defaulted and they needed to go into restructure of their debt, where creditors have forgotten 50% of principal amount that is being lent to these governments. So that is on global. On Indian side also, we have seen complete shutdown for April and May. That has created impact on complete economy. Many people have lost their jobs. People who would need to go on field every day, who do not have possibility of working from home and cover the work, they have lost their jobs, and that has again created impact on consumption, because no money in hand, they would try to reduce consumption of things wherever they can. And because of that, it has created very big impact on overall circulation of money. And now we are seeing some recovery. So globally, when I look at global markets, I have seen the recovery has started from June, but it looks like it is losing its momentum at this point of time.
Right.
But specifically from India, I have details from first week of November, where few of the speakers already touched upon it.
Yes.
Our auto industry is doing very well. They have showed double-digit growth. Few of the two-wheeler makers have showed growths in 30s.
Right.
That is very good. In real estate, that would have again impact, where now organizations have realized that work from home can work and can work effectively. So for retail or say for non-commercial real estate, we are seeing good bookings happen over festive season. But for commercial side, now organizations are taking very cautious step whether they want to increase their real estate spendings. So that's the one. And now coming back to how I'm seeing economy recovering from here, that would be again sector wise.
Okay.
A few sectors which are not actually impacted are like IT and ITES, right? Those sectors, or medical, FMCG, insurance, those are recovering fast. But few sectors which have impacted very largely, like travel and tourism, airline, hoteling industry, it is they have still some time to come out of the woods.
Right.
And overall, if we look at from financial, banking as well as non-banking financial institutions, their role is very important, where businesses are looking at these institutions for getting finances. But at the same point of time, if businesses won't succeed, that would create ultimate impact on our banking and non-banking sectors in India. That would drag them down. So key here is about when vaccine is coming, what type of vaccine is coming. If vaccine is one-time vaccine, where it is very simple to administer for a country like India, so many people. But if vaccine is coming where multiple doses are required, say every 6 months, then that would become more challenging. So when vaccine is coming would be a key on deciding how our economy would recover. And another piece to it is about consumer spending. And as people start getting jobs, they would get money, they would spend, and that would again help, the multiplier effect that we study in economics. When
Right.
100 rupees spent, that would become 700, 800, depending upon the marginal propensity to consume and marginal propensity to save. So these are overall thoughts I have, Amol, and thank you very much for giving the opportunity to share my thoughts.
Okay. So the whole idea of getting the
Sir, you're on mute.
We were not able to hear you.
yeah. Okay. Thanks. Okay. So great. Thank you everyone for sharing your first comment on the topic and giving the perspective. Uh, I could manage to get some nice thoughts from all of you. The whole idea was, asking you to speak about the current topic and share your views was to understand how actually you're dealing and how do you see the future. Before I, dwell into one by one questions, and I have some important questions to all of you. Let me share two important learnings here. And as a journalist, I'm confused. I'm confused because I have two questions. At one side, I have been seeing the commentary of all the bankers and economists that the demand is coming back, the situation is getting normal. And on the other side, I have been seeing the government data. Imagine the government data which says that 5 million people have lost jobs. The another data is the migrant laborers data they don't have. They do not know when the infrastructure projects will be started. So there is a big mismatch between the two things. And considering these two things, do not know how actually we are going to go ahead. At one side, the government has spent more than 20 lakh crore to boost the economy. Some of the money has already gone to MSMEs, SMEs, and But I believe that somehow it will take some time for the economy to come back until and unless government aggressively start working on the infrastructure projects, which are still not happening right now. So on the banking side, when the bankers are saying the recovery is happening, my observation is that the recovery is happening because the bankers are also offering one-time settlement. Now the question is, shall we take that into consideration and think about the credit growth? I think this is the question that the students should think, analyze, and observe. So to begin with, now the questions that I have some specifically, Mr. Arora, I will bring you here. And when you're talking next now, from where the next growth will come for India or how we are going to rise again, I would like you to tell me which are the sectors that you think are going to be very important for the economy, and where are the improvements that you are seeing, which are the sectors where you are seeing the improvements in the economy.
Sure.
Yeah.
So look, I think a lot of speakers did talk or touch upon some of the points that you have in your question, right? So we have seen some improvements on the automobile sector, and specifically on the rural side, the demand on the rural side, with the tractors and farming equipment as well as two-wheelers, because two-wheeler doesn't cost that kind of a money which a car would cost, right? So that is, I think, where some of the demand is getting generated, and that's kind of getting reflected in the tractor numbers. If you look at the scooters or two-wheelers, which are like primarily consumed by the rural sector, I think we are seeing some green shoots. I think someone, one of the panelists used that word. The other sector is FMCG, or the discretionary spend that we have, right? Because we obviously, when this kind of a crisis comes, like obviously people cut back on their non-discretionary spend, which is like travel or hotel or going to the restaurant, but they have to still kind of like feed the mouths, right? They have to kind of get people to like get the food, the staple, like the basic stuff. I think that's where again you are seeing. Of course, the pharma sector definitely is in good space, I would say, in a sweet spot. And then I think there's a category, which we must have all heard about it, TMT, which is like technology, media, and telecom, right? I think these are the three sectors where obviously they have been kind of strong as someone was, I think Mr. Acharya was talking about that, the internet demand in the rural areas has shown like really good kind of growth, and obviously the penetration has been kind of high obviously in urban areas as compared to the rural ones. So I think these are some of the sectors. I think export again is one. with a lot of those geopolitical tensions, between China, and being a risk manager, that's one area which I also kind of, keep a close track of. So the geopolitical tensions, between US and China, I think some of those supply lines are kind of, shifting. And that's where I think India has a good opportunity to kind of, make sure that the gems and, some of the textiles and some of those exports. And I think numbers, I don't know the exact number, but I think recent numbers do show some bit of a growth there as well. So I think these are some of the sectors which will definitely, where we are seeing some green shoots, and where I think there would be some quick bounce back. Some of the sectors where I think it'll still take quite a bit of time. I think a lot of people talked about it, the hotel, travel, tourism, as well as the commercial vehicle sector. I think that if I look at the vehicle thing, the rural demand for two-wheelers and tractors is good, but the commercial vehicle, I think, is going to take quite a bit of time. And I think Prasad talked about the real estate as well. That's where, again, it's a kind of little bit of a paradox, because a lot of companies, are gonna not gonna go like full 9 yards, saying that all of 90% or 100% people can work from home. But I think there'll be quite a bit of transformation in the commercial real estate sector as well.
Okay, that's a very good comment, Mr. Rara. I also got some of my coffee so I can put more energy, suffering from a bad cold. Thanks. Mr. Mehta, if you could give me more sense on the global banking right now, are you seeing the green shoots now? Your view, and obviously even Kishore's view, is very important for us, because you guys are the one who actually lend to the money. So are the borrowers coming running to you? Okay, give us some money now. We want to do some business. Is it happening?
Yeah, thanks, Amol. I think one of the things that needs to be brought into consideration is that the opportunities to lend decrease. So that's, as a banker, you have to, whenever you do the lending, it is on certain lendable criteria, and the expansion that needs to happen. So expansion generally goes down. So that is the reason why you would have a scenario where lending gets muted. And especially on the corporate side, that does happen. Having said that, still, I think what is really good, positive for India is some of the multinationals are still looking at India, and that impact just helps the banking sector on the lending space. So they are pushing up the equities, they're increasing the presence in India. So that is the space where I think a bit of activity still happens there. But generally on the new project and all, that would go down. From a perspective of how this would come out, because this is a lending issue, until unless lending happens to large projects or so, it would be very difficult for the economy to really pick it up in a fast pace. Traditionally, one needs to look at the general Keynesian model of economics, where whenever you are in deep red, you have to kickstart the economy by putting up more infrastructure projects. So, and that's the classic way where I think all the countries would try to do that. That's one way. And second way generally is through your giving money to people to consume. That's what we have is direct transfer benefits. So if the leakage is less, there's more direct transfer benefit, then it also happens that the money that has been given out goes into the market and goes into the spending. So at this stage, that is where we are. The lendable projects would be less, but as we move, as the growth picks up, that will come back.
Thanks, Mr. Mehta. Kishore, I will also take your views immediately on the same question, but let me tweak it a bit. The question is, which are the sectors where you are seeing the demand, and what will make you comfortable or more positive to lend aggressively or bank aggressively with the borrowers, because the situation is not that great right now?
Agree. See, we are being watchful. Most of the risk professionals across are being watchful. Credit growth has not picked up as much in some of the sectors. In some sectors, as Sushant said, multinationals, we are seeing quite a lot of resilience and a kind of a growth where it has picked up well. again, the bread and butter FMCG, hospitals, medical, those are the ones where we see some additional pickup, which we have seen in the last quarter or so. Manufacturing, real estate, and as Sushant said, I think getting back to the basics in terms of the growth and concentrating on infrastructure growth, that will create a lot of employment, that will have a multiplier effect in terms of demand. And India also being quite a resilient economy, and where consumption is the one where it drives the growth. I think those are the sectors. But we have also seen a lot of Indian banks registering significant amount of growth. For example, HDFC or ICICI, even Kotak Bank have given a significant amount of growth in the retail book, retail and the business banking books, which is quite positive to say, because those are the sectors which at the end of the day is where the some of the government aspects of Atmanirbhar and those kinds of things have also helped. And that's where I think we need to concentrate a bit more. The bigger ones, sectors, surely the oil and gas, the hospitality, aerospace, those are the ones which will see at least a year or two for the demand to pick up or stabilize from that aspect. Globally also, if we are talking about Asia Pacific, we are seeing growth very clearly coming back in places like Hong Kong, China. China, of course, had very minimal effect from the COVID perspective, but the government has put in some steps to build demand further. And the Singapore, we have seen demand pick up, Hong Kong as well, because the impact of COVID has also been relatively lesser than in India. So due to which the business have gone back to the workplaces or gone back to the amount of business they were doing a little bit earlier than in maybe India or some of the Western countries. So that's where I think we've seen growth happening. In the Western world, it's a bit of both, where it's government built, government schemes, which has helped out lots of the Kirana stores or the mom and pop stores, as we call it. And that is also where we have seen helped the economy prop up. And now we have in the European market, we have seen the second lockdown being imposed in UK, Germany, and those countries, which will again slow down growth to a certain extent. But I think we would be closely watching it and see how well we can. The risk professionals will surely be looking at it closely and see how we can support, but at the same time ensure the risks are mitigated to that extent, whether it's by security or by at least the growth of the or more visibility to the financials of the counterparties of the companies itself. That will give confidence for the credit growth.
Okay, thanks, Kishore. Mr. Acharya, we discussed digital payment, quite in detail. But now going ahead, do you think this rally will continue? On one side, when you say that we have reached to a pre-COVID level, which was the numbers which we had in February, but we have to also understand the fact that people also did a lot of a lot of shopping in terms of to store the food and everything, store the food and groceries, and automatically the digital payments went up. Now going ahead, what do you see? Because many fintechs have also drained up because of the situation. They didn't get the funds and all. And on the other side, all these new businesses emerged, whether the vegetable seller, the food seller. I mean, do you think that it has developed a sustainable model going ahead so that digital payment will push them and everything?
Yeah, well, so my take on this is it was basically, push and pull kind of a situation. All the fintechs were trying to kind of push, earlier, and COVID made actually a bigger impact than probably a demonetization made.
Right.
So there was a lot of pull factor, and the adoption of digital payments, or I would say doing transactions online, which is not just the payment part of it I'm talking here. The entire e-commerce also significantly got boosted because of this situation. and people are preferring to buy online, so Amazons of the world, or be it anybody else, Flipkart and all those, they suddenly saw a huge increase in number of orders than people picking up physically going to the stores. So will this, as you said, is this just a situational response, and people will then go back to their original pattern of consumption? I would say it's 50-50, but largely looking at the benefits of doing an e-commerce transaction and adopting digital payments and the ease of digital payments would certainly
Right.
make them adopt this as a pattern going forward. So I think I will draw the point from what other panelists were saying about whether we need commercial real estate is what all the institutions are thinking, as a pattern of change in the the way we work. Probably even individual level also, we all will always try to use maybe a QR code scanning, than picking up our pocket or picking our currencies out to pay someone else. So as low as 10 rupees transaction also you can do by a QR code scanning. It's definitely very convenient. There are, but I would say it's not everything, because though we are a digital rather trying to get all the consumers included into the digital revolution, and we're pushing the digital revolution, but there are lots of nuts and bolts needs to be actually fixed with that. So still I would say at a overall level, we have not even crossed maybe 40% of overall transactions through digitally in India. I mean, that's the kind of a penetration we are looking at, still 60% to cover. And to give you some numbers here, developed countries have 90-95% of their transactions actually happening through digitally. So long way to go. Adoption of smartphones is also a very important thing here. There are various opportunities which would be created. So even international opportunities, which we at NPCI you would have read in the news that we also launched our RuPay card in Bhutan recently, just 2 days back, that has been announced. In UPI also, because of the need of the hour, we have also started recurring payments, which was not there earlier as a facility. So these are all, changes which are required as per the requirements of the customers, be it, payment of their, premiums or SIPs and things like that. So digital is the way to go, but it comes with all its challenges. There are so many risks which would also crop up. So, there are so many risk professionals here on the panel.
Right.
So with this digital revolution, obviously, there will be many opportunities for many of these students to look into, how to manage and mitigate digital risks. So digital surveillance would be maybe another area. As I said, even, many senior citizens had to adopt to this digital revolution. So there's a huge need of even reverse mentoring. We have to teach them, how to, cope up with the probably we would have experienced that with our grandparents, parents, things like that. So reverse mentoring could be another way. Translation is another area which will open up. There are lots of opportunities will come up with this. Even this would according to us, this would actually be a base for even artificial intelligence to really take some steps, baby steps here in India and even at the organization level. So we are looking at because of everybody being distributed, HR is trying to use chatbots or things like that. So it would also pave way for certain other technologies, maybe blockchain. We're talking about digital currencies, long way to go as an answer to cryptocurrency. So digital is the way to go. It will certainly improve in the near term. Yes, the adoption has been kind of pushed by the situation, but I think having realized the benefits, people will not give it up. This is what I feel.
Okay.
Yeah, and Amol, if you may allow me, just to kind of add to what Rupesh said. So I think again, it's as Rupesh said, it's kind of like a push, but like people get used to a convenience. It's the behavioral part of it, right? You have the technology part of it, and you have the whole infrastructure, but then it's a behavioral part which kind of relates to the convenience which you're giving to the end user. And I think that's where, obviously there will be people who will go back to their, pre-COVID days, maybe I'll be also one of them, I'll go to the malls again and probably kind of do less shopping, online. But then, there will be few people who would stick to, because they're seeing that convenience and seeing the benefit of that. And that's where I think, the real estate point also we talked about, some companies jumped the gun and they said they're going to have like 100% people working from home.
Yeah.
So I think the new normal definitely is going to be different. How different it would be, I think will depend on a lot of factors, right? But as Rupesh said earlier, the seeding has been done. I think once that idea kind of gets into your mind and you see the convenience, then I think it's a slow journey, but it happens over a period of time. How fast it will happen, how fast people will adapt, then it's a combination of technology, it's a combination of the mindset and the behavior change and all that stuff. But yeah, I think we are on that path right now.
True. So I think not Rokuda is king going ahead, but digital is king. That's what people should catch up with. Okay. So moving ahead, obviously our focus specifically should be on where the recovery will come from and how finance sector will do well going ahead. So Mr. Pongshu, you mentioned a lot of things, how the real estate sector has been, what you can say, selling more flats, and we are seeing improvement there. In automobile also we are seeing improvement. Yes, those are some green shoots that we are seeing. But my question to you, and if you could elaborate more on this, is whether this is sustainable. This is specifically a need-driven demand, or this is what people are actually spending because they want to do this and they want to grow. And more importantly, is this sustainable? Because if we see the number of flats or the apartments that the real estate sector sold, maybe some 5,000 to 6,000 in the last 1 month. But if you look at the large, there are 6,000, flats unsold in this country. So, the numbers are still huge. So is the demand sustainable that we are seeing in this sector now?
Yeah, Amol. So there are two aspects to it. Because of the lockdown, many of the customers have postponed their buying decisions. And the current growth that we are seeing, the current sales growth that we are seeing, has some contribution from such postponed decisions that we will do after lockdown. Right. Another very important piece to consider about automobile as well as with real estate, that these are not repeat customers. So if someone is purchasing a two-wheeler, at least for 2-3 years, that customer will be using that. He is not purchasing another one. And a car might be for 4 or 5 years. If we are talking about flats, then maybe 20 years or maybe 10 years minimum. So it's not, repeat customers who would be giving business. Generally, there would be some, but in general, it is not the repeat business. Another aspect to it where people have migrated, in the sense where organizations have allowed, okay, instead of working from the best location, you can work from other location, your hometown. Then, okay, now it is decided we will go to hometown, they would do some shopping there. So if whether the growth is sustainable or it would continue, at this point of time, it is uncertain. Because of the festive season we have seen, because of tradition, people would purchase something on festive season. The major thing here is about how the unemployment rate goes down and how we are picking up as economy with regards to how fast we can circulate the money. So at this point of time, it is very difficult to comment on whether it would be sustainable in midterm or long term, because there are multiple moving parts, as I have mentioned, and there are no returning customers. And as you have rightly mentioned, especially on real estate, there are so many unsold flats and units which are available. And major challenge with those is normally the builders would do that with financing from banking or non-banking financial sectors, and that cost is giving pressure on them. So many of the times I have seen a few of my friends have got very good deal on that, and that was the trigger for them to go ahead with that particular transaction for real estate. So at this point of time, it would be very difficult it depends upon how we are managing to come out as a country of this crisis, and with multiple moving parts at this point of time, I will not be able to give a concrete answer whether it will be sustainable because there are multiple moving parts.
Right. But thanks for the honest feedback, Mr. Pongshe. And I will move on to Mr. Joseph. But before that, I would like to just tell all the students that after this question, I would like to take your questions, because these are, I have many questions scheduled, but I would like you to hear more, and I will shoot your questions. So there are two ways. I mean, first of all, please mention your name in the chat along with your question. And if you have any speaker in your mind, if you want to ask some questions to Mr. Arora, Mr. Pongshe, please mention his or his name there. Or otherwise, I will choose whom to ask that question to. So, Mr. Joseph, you must be advising to a lot of companies, and you have an exposure and what you can say, a network all over the world. Where are you seeing the green shoots? That is point number one. And what do you think? What will boost the economy going ahead? What will make the recovery at a level where we were going ahead?
Sure, I'll try to answer the second question first.
Sure.
So if you're a student of history, this is really interesting. I think it was Sushant who mentioned about the typical response to a crisis is the Keynesian model, where you spend a lot on the infrastructure and direct injection of capital into people's hand. And I would like to take the US economy over the last few months as a good example. What the government, US government has done, and that's presumably under the cloud of an election, the Trump government has put in, I think around, if I know my mathematics and history correct, around $4 trillion pumped into the economy as through an act called COVID Act. And that is, if you look at the amount of money, the 4 trillion is huge, but to take that into a perspective, that is more than the money the US government has spent on the whole Afghanistan war, which is almost 20 years now. So now where did that money go, or what did they spend the money on? Only 16% of that money has been set aside or has been put aside for vaccine development or helping take care of the frontline health workers. The rest of the money, if you look, and this could be a very populistic one, was, I think majority, more than half, 2.3 trillion is what I understood, was given directly to the business, when directly injected to the business to help them to sustain the small businesses. I think the federal regulators, including SEC and others, got around 450 billion to ensure that they are able to stabilize the market and markets don't come crashing down like something we saw in 2008. Then there was a lot of money that was given to we spoke to small businesses directly into the banks as part of the payroll protection program. And none of this money, and what I understood, has been given or been spent on infrastructure. So that I think we'll have to wait and see, because I think the new government, presumably it will be Joe Biden's presidency, will come in and probably spend that kind of money on infrastructure. So that's where we will probably see the growth in the US economy. And subsequently, that will have a ripple effect on a lot of other economies worldwide. And I think, most of my learned colleagues on the panel are from, have a good exposure to the Indian industry also. I think the government spending is also not on core infrastructure, is what I understood, compared to what they would have spent on 2008 and that time. So I think the growth will go back to the good old books on economics, or the Keynesian model, which saw us recover from the Great Depression, 2008 crisis for sure, and a lot of other mini depressions or recessions we saw in Mexico, Argentina, the ASEAN crisis in the 90s. So I think that's probably where the recovery would probably happen, when government decide to get their act together and spend money on infrastructure development. Now, I think to the earlier part of the question, what could make what are the banks or other institutions doing is they are trying to lend money to, of course, they are taking or trying to ensure that they don't credit default doesn't happen, especially in the small and retail banks. People who are losing jobs, they are trying to give them a little more of an extension to ensure that they don't default on their mortgages. So crisis like 2008 doesn't happen. But I think banks are trying to lend money to new age businesses which are I would say recession proof or COVID proof, or are able to show growth. And then the lines of credit being extended are also much more easier to access, is what I understood.
Okay, got your points, Mr. Joseph. After the big battle between Mr. Biden and Trump, now at least there is a clear picture that what is going to happen over there, and Mr. Biden can now at least work happily. You know, great. So I have a couple of questions, here, and to start with, I have the student Gopika Tirumala. Her question is about many people have lost jobs due to the pandemic, so they would not like to spend more, thus decreasing the flow of money in the economy. How will the economy recover from this? I partly mentioned in my comment, but I think this is still an important question. Mr. Arora, do you mind taking this question?
Sure. I can try. So look, I think it's the real situation, right, that we are in. Obviously, there are sentiments, and even like leave aside people who have lost a job and who don't have money in the pockets. People who have jobs, they are also stingy with the money in these times, right? And I think someone was talking about it earlier as well. So the consumption definitely goes down, and that's where most of the consumption would be only on the discretionary spend, right, where you the staples you need, the basic things that you need. It's a direct correlation. There's no doubt about that. But having said that, I think a lot of people have talked about, the Keynesian model and kind of, liquidity kind of coming into the market and infrastructure, projects getting kickstarted. I think some of those things, as well as, one of the panelists talked about, the stock market being, again, kind of to the pre-COVID days. I think these are some confidence building measures, right? And a lot of things in the market, whether it's job market or it's in the stock market, they're like more, how you feel in your mind, or what is the behavior that, you kind of, look at when you think about, these things. So I think when the green shoot starts happening, and Prasad also talked about, some kind of, flow into the economy, and some kind of, money kind of, circulating around. Employment rate definitely has to be kind of, kept a very close watch on. But once, some of these activities will pick, there will be some multiplier effect. But there are a lot of ifs, which we talked about. So infrastructure spending is one, but as we saw, from pre-COVID days, also the economy was getting a little sluggish, and only infrastructure spending will not kind of, do kind of, any big changes. I think private consumption also, or the private investment also has to work kind of hand in hand. So I think a lot of those things have to kind of, go in tandem to build that confidence. There has to be confidence building measures, or CBMs, to make sure that, we get into that positive mindset, and people like me or you who have jobs, they start spending, and then, it kind of creates that multiplier effect. I think that's how probably kind of we can get out of the situation. But yes, keeping in mind, the infrastructure, investment as well as private investment picks up, the liquidity kind of in the system kind of, comes up. I think those things are important.
Okay, thank you, Mr. Arora. So that was the question from the student, and I will take more questions from the students. There is a student called Uman Goenka, and Mr. Mehta, let me know if you would like to, take this question. The question is, what are the immediate steps that banks must follow to avoid this credit risk issues, like deteriorating credit quality across certain sectors, that need to be reflected with timely updates to credit ratings, refreshing of credit limits, and bolstering workout units?
Thanks. So I'll just answer this question as a more from the risk perspective, because this is a risk question. And my colleague Sheshadri would also probably confirm that. I think what happens from the bank is that your banks is in a business of giving and taking the money back. So it's not like a typical sales job where you give the money back. So when you give someone money, the idea is that can you get the money back? As soon as the instances, because it's not your money, it's depositor's money. So that's also a fact, because you are taking someone's money and you're on lending it. Obviously, you keep some capital of 10% and 15% is your shareholders' capital on it. So this is the most important part. So I think typically the banks, the way the credit risk function needs to work is that as soon as there's a first sign of deterioration, and generally those sign of deteriorations give quite some time. So it's not that one fine day it will bust. It does happen, but that would be more related to fraud or certain events, major events. So as a bank, you have to be very careful about it at the first instant of deterioration, which is where the affordability of the credit is not there. The banks needs to start taking action. I think banks do follow those models. The banks which follow those models in a better, more efficient way would see less and less of these issues cropping up than probably where we are not that much vigilant. So I think that's it's a simple method is that we need to keep a close tab on it. There would be generally in the banks, the portfolio reviews are done on each incidences.
Right.
The whole portfolio is looked at it. What is the impact of it going forward? What impact it would happen on their earnings? So all those portfolio reviews needs to be done on a regular basis. And I think I'm pretty sure that all banks must be doing the same as things about it. That's the best way to manage it. It's much more work for the credit risk side. My colleague Sheshadri would have much more work coming across on that because of it. But that's the way the bank manage it, and I think that's the way it should be done on an ongoing basis.
Yeah, point noted, Mr. Mehta. In fact, Kishore, if you want to add something to it, please go ahead. And I would also like you to take, the other question, Kishore. The question is about, hiring activities across all sectors have been impacted due to operational concerns and a slowdown in activities. The Indian BFSI sector has been through a hiring freeze due to disruptions caused by the pandemic. Is it advisable to choose the BFSI sector as a career in the present scenario? This question is asked by, Pooja.
Sure. Thanks. I fully agree with what Sushant said. I think very clearly the monitoring from a credit risk aspect, portfolio management is going to be even more under scrutiny for the benefit of the banks, the bank systems, the reporting to various central banks, regulatory authorities. So there is more work coming through, and we have already done that work, and it continues to evolve as the situation evolves, as the various credit scenarios evolve. So that is an ongoing thing where we need to monitor, continue to update the various policies, the appetites for various sectors, and all that will also come into play. With regard to the BFSI sector, see, my advice to the students are, I think, go with what is your passion. Okay, don't choose your career based on short-term situations, based on what's happening in the next 1 year, 1.5 year. Please, it should be a situation where after 5 years, is this what we kaha fas gaye yaar mein? It should not be that kind of a thing. It should be something which you like, and you should progress your career in the way you want it. Don't take short-term decisions don't take decisions based on short-term. Please take decisions based on the long-term. If BFSI is your area of interest, please wait for the opportunities. You will surely get it. I have been an alumni of IBS. I was in the first batch of IBS. And at that time, the Harshad Mehta thing happened. Markets 97 when I passed out, we were all hardly 33% or 1/3 of the group were placed. So I was patient. I wanted to be in the financial market, and it took time for me to get my first job. So it boils also to a personal situation, circumstances, and all that. But my only advice to all of you is growth. There is going to be a good story to see in the BFI sector in India. It's not that it's not going to be there. We need to be a bit choosy. We need to take decisions based on long term. Don't take decisions on short term, please.
Thanks, Kishore. In fact, I copy your thought, and that is actually a very fundamental thought, a very, very important one. Thanks for sharing that, Kishore. I'm sure students will copy it. Yes, Mr. Arora, I think you want to add something.
Amal, I definitely want to add to what Sushant said and, Kishore. So look, I think they talked about, continue to be vigilant. I think one of the things which I want to talk about, and I think probably Kishore or Sushant mentioned that earlier as well, is don't rely on old models. They are as good as, the last crisis. And as they say in mutual fund language, right? Past performance is not an indicator of future outcome. So I think every crisis teaches teaches us that, whatever model we have used until now, they were good only until the last crisis. I think we need to make sure that we learn from this, we be vigilant, and we continue to kind of, tweak, our models, tweak our, operating systems, and make sure that, we are on top of, those red flags, as Sushant mentioned, because they don't come in like all of a sudden. There are red flags that you will see, and just continue to be vigilant on that. Thanks.
Okay. Thanks for that note and submission, Mr. Arora. Yes, I think, and many NBFCs, banks, and even the financial institutions have started developing new business models now during the pandemic. I have been talking to a lot of these people, and I would like to just share here that a banker, in fact, spoke on the same lines. He says, "I'm going to adopt this mutual fund language henceforth, because if I'm going to test the history of every borrower, how he was in last 6 months and last 12 months, my ratings and my department will not allow me to lend him. So better I should look at the future potential, whether he has a future potential, and depending on that, I'm going to decide whether I should lend to him or not." I think this is an important thought. In fact, there is one more thought which most of the bankers are thinking about is, and I think that is going to be a key aspect for India, is cash flow based lending. If the bankers and NBFCs actually adopt that, I think even a farmer from the Konkan region and somebody who's doing a business in Kerala for tourists will also get a loan. He cannot get a loan today because he has a business only 4 months a year, something like this. But he earns a good money in that 4 years, in 4 months of that particular year. So I think those cash flow based lending is also now on the radar of the bankers. So I will take a few more questions, and Mr. Pongshe, I would like you to take this question. This is about the MSMEs and the NBFCs at large. The student is Gaurav Sarda, and his question is: a crucial pillar to the Indian economy, MSMEs are already struggling to sustain business, and this has also impacted the NBFC's asset quality requirements as well. Due to significant change in the market conditions, is it beneficial for NBFCs to revisit their business model assessment for their existing financial instruments? So we partly discussed this, but Mr. Pongshe, if you want to add something, we'll be happy.
No, absolutely. As Amol, we have already said, we already discussed this, that whatever past modules that may not be applicable in current scenario, so we need to have new models. So a brief answer to the question is yes, they would need to revisit and develop new models.
Okay, thanks, Mr. Pongshe. And Mr. Joseph, I have this question. This is more about the taxation front, but if you just want to add, if you just want to take it, would be really great. This question is by Mahesh, Sachda, Sohoda. Recently, the growth in GST collection, e-way bills, and e-invoicing, along with other indicators, suggest that the country's financial health has improved in recent quarters. The government seems quite optimistic about growth. What are your thoughts about it? Will the momentum sustain? Again, we had discussed the sustainability of the question. That's why I want you to answer this. But if you could add more into it.
Sure. So it's a tricky question because the data is showing to you that you have increase in collections, and does that correlate directly? Is there directly a correlation to show that it is because of the economy is improving? I doubt it, because see, if you look at the GDP, the GST collection and that correlation to GDP, yes, there's a correlation. But who are the people who are paying GST? Those are people who have a stable business, a stable income, they're registered, and they are within the premises of the tax law, and they are what you call as the formal economy, right? But I think we definitely know in a country like India, a lot of our GDP is dependent upon the informal economy. We really don't have any data at this point of time to show whether how much that economy has suffered, how much would that be able to come out of the yo-yo effect of COVID, or how would that recovery be? It will be a V-shaped recovery or a U-shaped recovery. Those questions are still unanswered. So thinking the GST collection is an important parameter, yes, I agree with it. But we are also dealing with the realms of unknown, where a lot of data is missing for us to make a valid assumption that it is because GST can be directly correlated to GDP growth or the economic growth.
Right. Okay, thank you, Danny, for that answer. And Mr. Acharya, I would like you to come into the picture because this question I think is pertinent to NPCI. And before that, a small comment is about digital payments. Yes, there is no doubt that digital payments are increasing. There is no doubt on the potential of the UPI and the way people are actually adopting QR scan code, biometric payments, and everything. But still, there are a lot of these, gaps. And I think we need to cover those gaps very fast because sometimes what happens, is these gaps will actually create the negative energy. And I think this question is also on the same lines, which is asked by a student called Varshini. Due to this pandemic, India is rapidly moving towards digitization, and with billions of transactions happening every day, failure rates are emerging as a major concern for NPCI. So, what are your thoughts about the experience at digital payments platform can be made major smooth and how failure rates can be reduced?
Okay. Yeah, thanks, Vashni, for the question. I would I would take it not it specifically for NPCI because I would not be able to comment on
Sure.
behalf of NPCI for this, Amol. But yes, there's been an unprecedented growth. There's unprecedented volume. Having said that, it is not just the NPCI. Even the regulator RBI is also concerned about this everything, and obviously NPCI or any such organization which is at the forefront of managing such settlements at such a high volume levels, we and everybody would actually strive to keep up with the volume. There's a business plan and there is a operations plan in place. See, the failure rate has been actually, if you look at NPCI's published numbers, you would get those numbers on his website. You can look at it. It has been really very low in spite of such a huge increase in the volume. So, Varshini, I would request you can go and look at the rate actually on the NPCI website. That will give you a better picture of how it has been handled in the last 8-9 months, especially. Having said that, it's always a catch-up game. There are various moving parts to this entire ecosystem of digital payments. There are TPAPs, there are wallets, there are even hardware, and even bandwidth also makes a lot of contribution to the entire experience being smooth. Having said that, we generally track it with all our participant bankers also, and there's a whole a lot of efforts actually made on giving a fantastic experience to the bankers. But as a whole, as an ecosystem, this is always under guards of NPCI as well as the master regulator, I would say, and the failure rates have been under control. Having said that, should we be complacent with this? No, obviously there's always a way to make it much more efficient and better, and that is where we generally strive at maintaining the customer experience as well as the user experience at the best levels.
Right. Thanks, Mr. Acharya, for taking that question and trying to elaborate, and sharing your perspective. But yes, I think I must say, obviously, the number might be less, but there are few numbers on that front. I have also been a victim of that. And also, I mean, that's the situation in India. Unfortunately, what is happening is, the digital payments are increasing, the digital is increasing, but the background or the base of it, which is the telecom infrastructure, has not escalated to a level. It cannot take sometimes the pressure which most pressure which is required. And you go to a hotel and restaurant, you pay the payment, and it's just processing. And ultimately, after 5 minutes, you give up and say, "Okay, you take the cash and go." And you go out after some times, and the money is deducted from your account. If you're in the same city, you can go back and check with him. But if you're in a different city, your money is lost because he's not going to pay you. So I think these are also the challenges. I don't know how RBI regulators, NPCI, and all the digital payment companies will come together and try to resolve the issues, or they will simply blame to telecom companies. I do not know. But I think these are also, those maybe 1% or maybe less than 1%. But these are also issues because this will discourage people. And I think we'll move ahead and Kishore, I think I should, ask you this question. Student called Snetha has this question. Due to the pandemic, it has become too cumbersome or difficult for banks to determine the extent and adequacy of collaterals available with them and the subsequent provisioning. Is it a good idea for banks to make additional disclosures required in the financial statements and the computation of capital adequacy for COVID-19?
Very, very good question. I think very timely.
Yes.
We have received a number of banks, for example, have received requests from the customers to waive covenants, right? And we know very clearly businesses are going through difficult situations, and it would have been a breach of covenant would be a even event of default, and the banks are allowed to take back the money or at least demand the money. So in this kind of a situation, we have received requests, number of banks across the globe, if I have to say, to waive certain covenants or move covenants from a time perspective or the way the reporting has happened. So I think from that perspective, we have not got very clear visibility of financials from the customers itself because of the big impact of COVID. Due to which banks might not have had clarity. But I would expect banks' risk management to be much more proactive, to be more timely in terms of reporting, because across the board, banks are governed by the various central banks, and the Basel II, Basel III norms will come into play very, very quickly in terms of disclosures, in terms of how the provisioning happens. And in that kind of a situation, I agree, banks' systems have to be as proactive as possible, have to be as timely as possible in terms of recording these and providing for these potential losses or losses, whatever you want to call it, and make as you say, as I think Jitu also said, the models we have in place should be as realistic, as forward-looking as possible, so that it will help decision making for the management of the various companies as well as banks and NBFIs much more quicker, and reporting as well. So that will ensure that much better disclosures are in place from that perspective. Hope that answers the question.
Yeah, I think yes, Kishore. In fact, that was a very good question. In fact, and I was expecting such strong questions from the students, and I can see number of questions actually there in the chat. So I closed in fact my question set, and just going through that only. So Mr. Arora, if you don't mind, can you take this question and try to be as crisp as possible? This question is specifically about the risk and the securities, and the student is Varun Damwani. When we talk about financial securities, there are three major pillars, namely routinely positive cash flow, personal resources, public and private benefits. What combination is preferable to have a financial stability and security post-pandemic?
Sorry, Amol. I think I have more qualified panelists to answer that question. I'll probably like to pass that, if not.
Sure,
if it's okay with you. Yeah.
No worries, Mr. Arora. Mr. Mehta, do you want to take this question? This is about the financial stability. Do you want me to repeat it?
Yeah, I'm just rereading this. This is from Varun Damwani to everyone.
Yes.
Financial securities, major pillars, positive cash flow, personal resources, public and private benefit. What combination is preferable to have financial stability and security in post-pandemic? So if it is from the banking sector, if this question relates to the banking sector, I think from bank's perspective, the most important part is always that whether the lending that has happened, whether the client can service that or not. I think security is a case for event of default. The first thing that we need, the serviceability. You don't go and over leverage a bank or a client. So client should not be over leveraged. And obviously, each kind of security has got what we call different probability of default and loss that happens at event of default. So those models are already built in across. So obviously cash flow would be a positive if cash flow is a security, tangible security. Generally getting cash flow as a tangible security is slightly difficult because you get a benefit if you get it as a 100% cash. And if someone is giving 100% cash, why would he give take the facility? Yeah, so it's a very valid and very well structured question, but generally the first part we always look at is that affordability from the client's perspective, whether he can service the debt, and then all the securities go into the model of what is the probability of default, what is going to be the loss given at default. Depending on the financial security, the loss given at default would be separate, and that is already obviously factored into the bank. So,
Okay.
yeah,
Thanks,
assessment.
thanks, Mr. Mehta. Now, there are like, we still have like 10, 15 minutes, but before, that, I would like, to focus more on the career-oriented and job-oriented questions, which will be specifically helpful for the students. So, even Mr. Mehta, to start with the others, if you could also add quickly, because you are heading a part of a global bank and dealing with a lot of clients, if you could tell us what skills are needed to adopt to future careers in banking and finance after the drastic effect of the banking sector due to COVID? And how can we see the opportunities for the freshers? This is the question which is asked by Muskan Mittal.
I think probably if I rephrase the question, it is about what kind of skill sets are required at the bank. So generally in the banks, specifically if you're looking at Indian scenario, you've got two sets of jobs. One is directly with a bank where largely the roles are either on the sales side, that's a front end side, and business development, or an analyst side where you do a lot of analysis work. So for the analysis work as an analyst, you need to have a good set of understanding of the financial analysis, how the analysis is done across. And in terms of business development first side, you need to have a good skill set of to understand the product and interact with the client. So these are two separate things, but there is obviously, if you are a good analyst in a bank, it always helps. You could be a better frontline business development person. That's one part of it. Second part of opportunities that is coming largely into Indian sector is that most of the foreign banks would have their large amount of risk management functions and operations functions is being outsourced into India. And that's a huge volume. The number of people employed on that is large. Those we call it as global service center. And those has got a huge opportunity, and those opportunities are in operations side. And so you need to be very good at managing people, good at process engineering, those skill set. And other side would be a good on risk management functions. So those are two separate broadly sets of job opportunities that is coming. And the second set of job opportunities is still going to come in a bigger and bigger way.
Thanks,
Amol,
Mr. Mehta, for adding
if
that.
you allow me, I would just like to add to what Sushant said.
Sure.
I think the very, very good things which Sushant said. I think the other thing is some of the lots of banks are looking at the future of banking, AI, and those kinds of things. So that is a very good combination to have skill sets in artificial intelligence, along with the financials analysis and those kinds of things which automate things, process re-engineering, and those is a very good combination also to have in various banks across.
Right, Kishore. Very interesting. In fact, Government of India is also thinking very aggressively about analytics and artificial intelligence. Just a few days back, I was interviewing somebody from MOS Finance, and he says we are trying to see, how analytics can be adopted. And if you guys
analytics is very good, data crunching, analytics, absolutely.
Yes, and in fact, when Mr. Dinesh Khara took over as the chairman of SBI, the first thing he says that my first priority is analytics. How can I build analytics everywhere from top to bottom? I think so. These are very important. Thank you so much, Kishore, for adding that. Mr. Pongsha, I will come to you. What kind of skill sets do you think the student should have to enter into BFSI or the finance space going ahead? And if you could also add, what kind of job opportunities are available in your company?
Okay, so with regards to the skill sets, again, as discussed earlier by Sushant, there would be different categories, different segments, and if you are looking purely from India standpoint, you have opportunities in local market or the outsourced centers of the global financial institutions. So I believe for India segment, Sushant has already covered what type of skill sets are required, analytics and sales. So I will talk more from global centers which are here in India. So first thing that is required is flexibility. In addition to basic skills that we look at, first thing that is required is flexibility, because these global banks serve all the global regions, right from Japan till Canada, USA, which requires working in different shift hours. So that is one of the uh, advantageous thing if job seekers are flexible working in different shift. I know it is not that simple, but that is one of the things. Other things like we have talked about analytics, or even for that matter robotics, automation. So in addition to the core competencies where basic knowledge of finance, basic knowledge of accounting, if students could come up with could enhance their knowledge levels on AI or business transformation, analytics, data mining. So all these things are uh, looked very favorably when candidates are interviewed. And with regards to the questions which has been asked, what type of opportunities are available within my organizations currently, all those are published on LinkedIn. People can take a look at it. And because it's a very big organizations, I may not have visibility to all the verticals that are hiring. So students can visit our LinkedIn page where all the job opportunities and requirements are published.
Okay. I think students are going to do that immediately after the session, Mr. Ponkshe, for sure. So moving ahead, Mr. Danny, are you there? I would like to take to the same questions with you. What are the skill sets, Mr. Joseph, that you see going ahead required for the students in the BFSI space? What kind of job opportunities do you see?
Sure. So I think a couple of things comes to my mind to answer that. So one of the things that's come out of the pandemic is what we call as frauds or cyber attacks or anything that is related to people trying to make use of the pandemic in a dubious manner. So banks and a lot of financial institutions, and we spoke about digital payments, the explosion of digital payment gateways during the pandemic, people going from to a cashless economy much faster than we thought. So the opportunity for the black hats, the gray hats to exploit the vulnerabilities in the system has increased manyfold. So I think there is a lot of opportunities in the cyberspace, cyber protections, cyber threat intelligence, especially with the people who have a domain knowledge. So you understand this, for example, the end-to-end of a payment gateway. You understand what could be the potential loopholes and what could be the vulnerabilities some of these hackers could exploit, and how do you, and more importantly, what are the things you can put in place to mitigate them. So there is a lot of opportunities in the technology / cyberspace. Broader technology, if you look at it, it is analytics. I think one of the panelists quoted about SBI's chairman's new policies on on going into analytics space. So financial analytics, fintechs, of course, have a lot of opportunities. So merging technology, and a lot of the would have a background in technology for sure. So I think dusting the coding skills, technology skills, plus um, applying the domain knowledge they learn in the banking would be extremely important, is what I think.
I think very valid points, Mr. Joseph. And Mr. Acharya, I will come to you as well. But before that, we still have like 5 to 7 minutes left, and I will ask all the students if you have anything specifically related to skills or jobs. I think please post it. I will try my best to take that question. Anything related to jobs to anybody who's there in our panel. So, Mr. Acharya, your also quick view on the skill sets and what kind of jobs are available at maybe NPCI or that you see in your sector going ahead.
Okay. So first of all, I would like to state here that, in spite of this situation, pandemic, NPCI was hiring, and NPCI kept on, on the hiring plan as it is. We in fact hired around, I think 60 odd graduate engineer trainees for our business development. So that's where, probably, I think somebody has mentioned, or I've seen on the chat a question around fintech. And that's my favorite, and my advice to all the students in BFSI is the entire BFSI, there will be a complete tectonic shift, from technology, which will happen in the BFSI. We will see the asset management companies, moving, the technology way, be it NBFCs, be it, payments, which is a very basic thing, which is already moved. But there will be a complete shift which will happen in the entire BFSI by the technology. And maybe it would be right to say, maybe I could be wrong in view of the panelists, but if you look at, and maybe just we all can introspect what has been the major conceptual change in any of our basic domain of finance or insurance or banking in last 20 years. Very few examples we will be able to give, but technology is the, I think, driver. So the technology will lead all of the BFSI, and we will see major transformation and obviously major opportunities for those who are actually riding the fintech. So I would say even 60 to 70% of knowledge of technology will help you place very comfortably in this entire tectonic shift which is going to happen in the BFSI space. Apart from that, specifically speaking, I think touched upon certain aspects of even digital entertainment is going to be really a very big space going forward. That's what I feel. Media consumption is very low in India, so that's probably digital especially, so that's going to be an area which will be very interesting to look forward to. Fraud risk, digital surveillance is another area. If you're talking of shift into the way we transact everything digitally, obviously this will be another area. Artificial intelligence is another area which will open up because of that. I think many opportunities will come there. Data analytics is, I think, the base of AI. So data and AI would go hand in hand, and BFSI would be the first movers in that space. So that would be also an interesting, from an immediate short term 2 to 3 years perspective. I think students can look forward to that.
Right, Mr. Acharya and Mr. Arora, I would like you to take this question and share your views.
Sure, I think most of the things have already been covered, right? But yes, as most of the panelists said, technology is going to play a very big role. So I think having that knowledge of technology and combined with the typical skills that we need from a finance perspective, which is number crunching and understanding the financial statement, plus the knowledge of the product. Most of the fintech companies, they want that like a good combination of product knowledge and kind of technology knowledge. I think that's going to be very important. One thing I think which probably was not talked about from a risk perspective, I think we talked about a lot of fraud risk and credit risk. And I think Danny also talked about information security risk. I think privacy is going to be very big, going forward. There's a new law which is coming up. I think it's going to come up, in the next session. And the climate risk, right? If you look at any of the top risks from World Economic Forum or any of these organizations, the way climate is changing and the way sustainability and all that. I think these are non-traditional areas of risk, because we focus most on process risk, operational risk, and information security is going to be very big. But climate risk, I think, is going to be big. A little bit of a future trend. I think students should kind of keep a tab of.
Very well said, Mr. Arora. My submission on the jobs part here is obviously all the important topics are already being covered. Everybody has already given the great perspective on the jobs profile available. But there's just one point I would like to highlight here. In my conversation with the DBS chief, what I learned from is he said that I'm not hiring bankers anymore going ahead. I'm hiring the engineers. I'm hiring the philosophers. I'm hiring the historians. I'm hiring the psychiatrists. And his explanation is this, that if I'm going to use the artificial intelligence, if I'm going to use the analytics, my job is to find out the borrower. So if I'm going to find out the borrower, then all these people will bring their perspective and the knowledge together to tell me whether this person is good enough to get the credit or not. I think this is where the banking is heading, and these are also very important points. And another point which I, in fact, heard from Dr. Raghuram Rajan when he was delivering a speech at NISM 4-5 years back when he was a governor, what he told the students is this, that, it's absolutely fine even if you're studying MBA finance and if you don't turn out to be a banker or the financial executive. It's just that you should wake up in the morning and find out whether the job which you're doing is gives you that enjoyment or not. If it's not, then you should find out what gives you that enjoyment. This is not my word. This is Mr. Rajan's words. So you can carry that depending on your, capability and your family's potential. Thanks for all these great insights.
So Amol, just one last point, as you were
Sure.
talking about, people hiring philosophers and storytellers and all that. So very interesting point on Daniel Pink, in his book says that, the future, of all the professions that we are in will be ruled by people who are, stronger from the right side of the brain, not on the left side of the brain, right? Which means that, people who are creative, who can connect the dots, who can tell stories. I think that is what will be needed, because left side of the brain would be overtaken by, all the artificial intelligence and machine learning.
Yes. I'm with you actually.
Yeah, exactly. Quite interesting. In fact, we at Economic Times, and specifically the news portal that I hire, I actually look for the MBA finance students or the students. Like, I go to Symbiosis more often, and I hire a lot of students from them, those who want to do a trainee or internship with us, because my idea is very different. I feel that, okay, rather than hiring a student from a media background, let me hire somebody from MBA background. At least I would not have to tell him that what is RBI and how many deputy governors which RBI has. And you can see the kind of questions which the MBA students ask, right?
Yeah,
I think
that's right.
that's quite interesting. So I have just one, I will call it a rapid fire question before we wrap up, not specifically about the topic that we have, but if you could tell us, and Mr. Rara, starting from you, we all are working still in the virtual world. We don't know when will this world end, specifically the virtual world, not the world. What are you missing the most in this virtual world, Mr. Rara?
My coffee time with my team. So my team, can tell that I never used to sit in my cabin. I was always kind of hovering around the aisles where my team used to sit, and my one-on-ones would be mostly, on coffee or smoke break. So that's the thing which I'm missing the most.
Okay. Coffee with Mr. Arora. Nice. Kishore, could you just tell me what are you missing the most in the virtual world?
I agree. I think the camaraderie, the spirit with the team members, the meeting, getting to know them personally, and what's happening, how we can work together and make things work. I think that is very, very thing I'm missing quite a lot. If I can take a minute more, Amol, if it's okay, my only advice to all the students in IBS, these are surely unprecedented times. I think it's become a cliche now, everybody telling that, but please ensure that you are the future of the country. You are the next generation. So take decisions from a long-term perspective. Most important, don't be disappointed. Do everything. Don't do superficial. Go into the depth to understand the things, and understand the philosophy, and then get to the crux of the situation. And last but not the least, health is so important, from mental health as well as physical health. So please speak to people. If you're disappointed, don't keep it to yourself and fester. Speak, reach out to people as much as possible, and have a half an hour or 45 minutes stress buster for yourself, whether it's walking, listening to music, running, whatever it is. You should have a stress buster. Don't allow things to fester. Look after yourself well and your family. Thank you, Amol.
I'm really glad, Kishore, you shared that point. That is very, very important. Moving ahead, Mr. Mehta, what are you missing the most?
I think, we miss the team most, the interaction with the team, the light banter chat we have. Those are all actual stress busters. And you get to know the people better there. So I think that's the most we miss.
Oh, very interesting. Mr. Pongshe.
Yeah, a couple of things. Number one, obviously, interaction with team members. And number two, obviously, finishing work on time. Because now I'm working from home. Okay, I still have time. I can, do it afterwards. And I end up doing for extended hours.
Okay. Mr. Joseph.
I think just to add to what Jitu said, but slight deviation there, slightly more stronger beverage with the team. So that's what I miss, that bonding, I would say.
Yeah.
But I think Kishore, what you said is really important. The mental well-being, taking breaks, not having the feeling that the world is going to come crashing down.
Yeah.
That's much more long-term resilience.
Right. Yeah, Mr. Acharya.
Yeah, Amol, I think I've said that, we've been working from office, so there's been some interaction with the colleagues. So, but I'm certainly, missing the freedom to travel and to go anywhere, where you want to go. I think that's been, mentally also, it's been a quite difficult to deal with.
Quite interesting, Mr. Acharya. And I think I received some good insights from all of you. I'm sure students also enjoyed that. Before I wrap up, I would like to tell you that at ETBFSI, we do cover a lot of the points that we already discussed. And I would like you to, stay tuned to etbfsi.com. Most of the job aspect stories that we also do, the innovative stories about the banking and the finance and the fintech side, we also do at ETBFSI. In fact, recently, just a month back, we released a 40-page report covering all the top leaders of the BFSI space. That report is freely available on the website. You can just mention your email ID and you can subscribe to our daily newsletter, which will give a lot of insights. And keep logging into etbfsi.com. And I think you can stay in touch with all of us on the LinkedIn or social media accounts. And as and when you need any support, any other guidance, we'll be happy to help you. That's what I can say on behalf of all the panelists. Thank you so much, Mr. Mehta, Mr. Arora, Kishore Seshadri, Rupesh Acharya, and Mr. Joseph for the insights that you shared with us. And thank you, IBS and Money Matters Club, for inviting us and listening to us very patiently. Thank you so much, my dear students.
So before we wrap, thank you, Amol, for coordinating this discussion. I think your insights, like while we were talking, I think really good. Thank you so much for that.
Thank you. Agree.
Thank you, everyone.
Yeah,
thank you very much, everyone.
Thanks, everyone. And all the best to students.
Yeah.
Thank you.
All the best.
Yeah.
All the best.
Thanks, guys.
Thank you, guys. Let's stay in touch on LinkedIn. Thank you.
Thank you.
Thank you to all the panelists for such an insightful session. I, on behalf of the Money Matters Club, would like to extend a vote of thanks to our eminent guests and faculty members for their presence and support for the evening. It was really an insightful session and we were able to learn a lot from this.
Thank you.
All right. Thank you.
Thank you. Bye.
Thanks, Sushant.
We would also like to thank our club mentor, Dr. Narasimhachari sir, and we'd like to extend our gratitude to our student activity coordinator, Professor Madhvi ma'am, knowledge partner, 4Vision, our promotional partner, IBS Messenger, and coverage partner, Club Newswire.
We hope today's financial collusion provided you a flare of knowledge and gave you an opportunity for sharing ideas and getting your doubts cleared. We are also glad to inform that tomorrow we have this interesting conclave again with another set of veterans for more learning. Thank you, everyone, and we hope to see you in our upcoming webinar and future events.